Hey everybody, now for one of my very favorite parts.
Yes.
We have Tatiana Ivleva-Lopez from Prosperity Home Mortgage to talk to us about what's going on with the interest rates and one of my favorite topics to talk about with a lender. So,
Yes.
Hi Tatiana.
Hello, how are you guys?
We are good. Thank you.
Yeah,
for
it's my favorite topic too today. So let's
good.
get to it. I'm gonna share my beautiful PowerPoint presentation today.
Yay!
And the rates are doing pretty good. So as you probably know already, the Fed left interest rates unchanged. At their final meeting of 2023, and they also signaled us that the 2024 could bring significant rate cuts. So the decision leaves rates unchanged for the prime rate, and the Powell said that inflation has eased over the past year. Hikes are not the base case anymore, as it was 60, 90 days ago. So, and following that statement, and as you know, the prime rates, the mortgage rates are not following prime rates, but the comments are very important. And the following this statement, mortgage rates actually fell on Wednesday, and now they fell from 7.09% to 6.82. Right here we can see or 89 on 30-year fixed, and FHA is 6.7. VA is also around the same, maybe actually even lower than FHA. And if people want to buy some rates down, they could get FHA or VA rates in fives. Wow. Actually.
It's so good to see those numbers again.
Yeah, it is. Okay, and I have a question for you. Sean got a question from a potential buyer today, and here it was. And I want to hear how you would respond so that we aren't the only ones. He said, well, I think I'm going to wait until the rates are back in the fours.
Yes. Yeah.
Did he mention how many years he's gonna wait for it?
Well, so the conversation was, they said, yeah, we locked in at 3.25. We've seen a couple of houses we really like, but we just can't make sense of leaving until it hits like 4 or 4.25. And so my response was, unless there's some other national catastrophe, we're likely not to see the fours again. But that's kind of what their mindset is now. But so do you agree with that? We're not moving back towards the fours again by the end of 2024, correct?
No, I absolutely agree with that. And all the financial institutions, they predict that rates will drop they're going to be around 6%. So nobody's talking about 4.
Yeah.
And it's very complex. The economy is very complex thing, and we can just predict. We don't know, of course, what's gonna happen, but waiting for 4% could take years. We might not ever see it in our lifetime, and missing out on housing appreciation. That's one thing that we were talking about last time.
Yeah, and if they do get to the fours, but if that does happen to happen, then they're going to pay more than that difference in interest just by overpaying for the house, because the competition is going to be so crazy. So
exactly. So just buy now and refinance later. If you can afford buying now with this rate, just buy now and refinance later.
Yeah, that's right. That's right. Well, good. Glad we were on the right track with our answer. Okay, so anything else on interest rates?
No, that's about it. So basically, one thing to remember: when inflation is going down, the rates are going down, and it's logical. Inflation is when prices are going up. That's why the rates are going up. If inflation is going down, the rates are going to go down.
Okay. All right. Well, hopefully we just keep on moving in that direction.
Yeah.
So holidays. Oh yeah, go ahead.
I do want to talk about the holidays, but real quick, there is this handy dandy bit of information that you send me. I see from you so often, and I can never get the numbers straight. It's for every how many thousands a change in the sales or in the loan amount is how much added or taken away in your payment per month?
Yeah,
Oh,
it's about like
it
every
costs a hundred
10,000
percent.
is about $60.
I
Every
say that again, I'm
10,000 is
sorry.
about $60 per month.
Okay,
Okay,
Or 1,000 is $6, 10,000 is $60,
okay.
okay,
100,000 is 600.
So that's a good rule of thumb to use as we're doing the
Okay,
calculation. Okay,
thank
gotcha.
you.
Yeah.
You're
I have to be the expert.
I know you do. Okay, yes, holiday time, and you have all kinds of really amazing advice for your borrowers on what
Not
to
to
do when in the holiday spirit, right?
Exactly. Yeah, we have our favorite do's and don'ts. Don't get carried away, right? So
That's right. I bought my wife a car.
Yeah.
I know. But people need to understand that what we look at when we qualify someone for a mortgage. We look
Okay.
at these three pieces of puzzle. We have credit, income, and assets.
Mhm.
If you don't have one, we don't have a mortgage. One out
Okay.
of three is gone. We cannot do the mortgage. So it's important to understand that. And yeah, with holidays especially, it's important. So the credit, like this credit, dues. We always ask to keep the balances below 10% of the limit. So that's important part for credit cards. If your limit is $10,000, keep it below the balance, keep the balance below 10% of the limit.
Okay.
Of course, make payments on time,
Yeah.
and keep accounts in good standing. Those are, basic things that help to keep good credit score. And also, when we qualify someone, we look at their we don't look at their balances as much as we look at their monthly payments. So, but the higher the balance, higher the monthly payment, and lower
Okay.
price range you might be able to get into. So don't get more than 10% of the balance, and don't get carried away and apply or open a bunch of credit cards, because the inquiries will lower the credit score. And actually the credit cards, new credit could lower the credit score as well. Don't be late on payments, especially when you have a lot of credit cards. It's difficult to remember, and
Yeah.
it's easy to forget. It's good to put them on maybe automated payments, but definitely, if you have a lot of credit cards, make like a Excel spreadsheet and put them in there so you remember to make those payments.
Yeah.
Yeah, and even if you only set the automatic payments during the whole loan process, like let's say you're not sure. I know with our income, it fluctuates. So I don't have auto payments because I pay a percentage of whatever the income is, right? If we make a lot more, then I pay a lot more off. But I know when we were going through our loan process and buying this house, I set the automatic payments. I set it for like, I think we did a little bit above the minimum what it would be, but just so that if life happened and everything got crazy, that was not going to be a
Yep.
problem.
That's right.
Yeah, it's a good idea.
Yeah. So one of the confusion topics that a lot of borrowers have is they think when they get your pre-approval, when they apply for the loan, and you run all their credit and you do everything and they make the offer and they're under contract. I ran into situations, and tell me if you do, where they think that's it,
Like they're qualified.
that they're qualified and they've got the loan, and then they feel like they're in the clear to go and buy the wife the car, or
Buy
not that
furniture.
he did not do that.
Go buy
But do all these
furniture.
things.
Yeah.
But tell us why that is not how it is.
Yeah, because we do pull credit once every 4 months, so it's good for 4 months. However, we do soft monitoring, so we check if there are new inquiries or new cards open or new credit car loans. We actually also see if there's significant change in the balance. If there was a credit card with small balance and now it has $20,000 balance on it, we will get that notification and we will ask for new payment, and
Okay,
that could potentially disqualify someone for, you know, whatever price range they're looking for. It's important not to do any of that while applying for a mortgage. Once they're settled, once they have the house, you know, they can do whatever they want. We don't monitor them anymore.
Yeah.
But during the process, it's important not to co-sign for anyone.
Yeah.
One common misunderstanding is that if I co-sign for someone, because I'm just a co-signer and I'm not going to be making payments, we're not going to count the payment against them. But it's actually incorrect, because for us to not to count those payments, we need to see 12 months of payment history made by another person. So if you just co-sign for someone and it hasn't been 12 months, we would have to count that payment against.
right.
Wow.
You have to calculate that worst case scenario.
Exactly.
Okay.
And so I know, you specifically have been incredible for our buyers, even in quick turnarounds. So you've pre-approved them, you've done the POFA, the pre-offer full approval. And we've had some instances where you have given us a 2-week turnaround to settlement, right? From the time they're under contract to settlement. So Tatiana, woo, will you still do the soft pull even in that short amount of time, the 2 weeks?
It's constant.
Okay,
It's constant from the beginning until the end.
Because you have to
Okay.
monitor up until settlement, you have to monitor what your risk is and make sure that nothing is happening on that credit, on that file.
Exactly. And I did have situations when settlement is tomorrow and I get notification at 9 o'clock the day before that somebody opened 2 credit cards. They went to
Oh,
TJ
man.
Maxx, 10% off, woohoo. Because it's holiday season. And
Yeah.
then we would have to deal with that and potentially delay the settlement. So we don't want that to happen. Just
Yeah.
but I can't say that maybe buying a couch would be a deal breaker. So I just want people to understand that it's the best practices to talk to the lender and ask them before doing something.
Yeah.
May I co-sign? May I apply for someone? And maybe their debt to income ratio is so low that we have a room for them to get additional debt and be okay. So don't assume that it's like, don't do it at all. You just talk
Yeah.
to
Just
the
have
lender,
that
but
conversation.
definitely don't be late on your payments. That's for sure.
So a
Okay.
great strategy moving
Mhm.
forward is you buy a house every year, you buy it at Christmas so that your lender can enforce a Christmas gift budget. So then you don't have to.
I think this is a weird mind
Yes.
stretch for Sean. This is why I handle our finances.
It all works. It all works. So explain why closing an account is bad. Doesn't that like show that you're freeing up more credit?
Well, because closing accounts actually may lower the credit score.
Yep. Is that because it
That's
gets
why we
rid
don't
of,
recommend doing that before you buy a house.
and does it lower the credit score because let's say you have a pool of let's say $100,000 in available credit, and you've got $10,000 out there, but then you close a credit card that had $30,000 credit on it, and now all of a sudden your credit ratio went from 10% up to almost 30%. Is that how that would affect the credit score on that?
That's one of the examples. It could lower it for different reasons, including this one, or maybe because this account was the oldest account and all others are new, and now you close this account of 10 years and everything else is 2 years old or 3 months old, and now you have a brand new history, and that will lower your credit score.
Okay.
There's different factors that play a role in the, you know, credit scoring. That's
Yeah.
why it's just better not to do any of this, you know, anything without consulting with the lender.
Got it. Okay, that makes sense.
Yeah.
Yep.
So
All
this
right.
is a credit. Do you want me to talk about income and assets as well?
Yeah.
Yes.
Okay. Okay. So let's talk about income. Keep working the same hours or more. That's for, you know, if you're on a hourly salary and maybe you're making money overtime, just keep on working the same or more. We want to make sure that there's no decline in income, or if we're counting overtime income and all of a sudden you stop working overtime, then, you know,
Yeah.
you'd have to recalculate the income and it will be lower. So that's
Right.
keep working the same or more. If there are any changes to income or employment, like you were hourly and now your base salary, or vice versa, or you were on W-2 and now you're 1099, just
Yep.
make sure you notify the lender. If you work for this company that may be outsourcing you to, you have contracts with, I don't know, Voice of America, and but you work for XYZ company and now you're actually getting transferred to work for Voice of America and being their employee. So that is change in employment, even though maybe you don't really feel any difference because you're
Yeah.
in the same office, the same boss and everything, but it's different employer. We need to know about that. If someone goes to maybe active duty or going on maternity leave, because that pay could change, or being laid off or furloughed, hopefully not for a while, but you know,
Yeah.
if any of that happens, notify the lender. And for don'ts, again, you know, don't change jobs, profession, or type of income without talking to the lender first.
Cool.
Sometimes changing jobs is a good thing, and types of income too, but you just want to make sure that it's okay before you do it, not after.
And
And
go
I
ahead.
have a question.
Mhm.
You can go first.
Well, I was just going to say that I know we're talking about this during the holiday season, but these rules apply across the board, like year round. So everything that we're saying, you know,
Yeah.
put that in the context of if you're buying a house in the summer or any time. So I just wanted to make that clarification. So,
So my question, I heard something this morning on WTOP. That's not a plug, even though I listen to them every morning. But they were saying that some larger companies, I hope I get this right, they're now giving a long notice to people that they're going to lay off. And I think they specifically mentioned Spotify, who apparently did a ton of layoffs, and they gave their employees up to 5 months notice for them to start finding other employment, you know? So this was seen as a show of goodwill and
Yeah.
helping and all this, like you're gonna lose your job, but hey, we're gonna give you this much notice for you to find a new one. Have you had that come up? If, or how would you deal with that? Would if that were me and you were my loan officer and I'm under contract and I'm gonna settle in 2 weeks and I just got this notification from my boss today, is that something I need to come and tell you?
Absolutely, and that would potentially be a problem, because the way the process works, when we start initially working on application on approval, we do verify verification of employment, right? And then we do the same again right before the settlement. Within about 10 days of the settlement, we have to verify. And what we ask for is if there's possibility of continuance of work for at least 3 years. We always look for 3 years. So if we find out that even in 5 months they're gonna get laid off, that is a problem. We cannot use that income. So the person needs to find another job, and it's possible that we can use the new job even before they start it all depends on the program and on the situation, but there is a possibility of that if they find another job real fast and they start working there, maybe after the settlement, but it could be okay depending
Yeah.
on circumstances.
Okay.
So,
Okay.
but us finding out that they're gonna be out in less than 3 years, it is a problem.
Yeah, and you would find out anyway when you ran the VOE again, right before the verification of employment, right before settlement, whether they told you or not, right?
Exactly, but sooner we know, the better.
Yeah.
Exactly.
Okay.
Okay,
Makes
Yeah.
sense.
all right.
Okay, so the last one, assets.
Okay.
So for assets, that's also for holiday season, right?
Yes.
Keep positive balance, please. Don't have insufficient funds in your account,
Yeah,
because it's a big red flag for underwriting. They don't like to see that, and I understand why, because if they verify your assets and they see that your balance goes to negative, the legitimate question is how is it gonna be when you have a mortgage?
yeah,
Yeah.
Are you gonna be running low on money all the time? So, and sometimes people maybe have checking and savings account, and they move money from checking to savings, so they know that they have enough money, but still it's not good to have negative balances or insufficient funds in there. So just stay away from that. Always notify the lender if you're planning on receiving gifts, or maybe you want to liquidate your stocks or retirement accounts, or make any transfers, big transfers, because we do look for that and we question that. I don't know why I have this last bullet point. Never mind that. I think it's carried over from income. Don't pay attention to that one. La la la.
Yeah.
Well, let me ask you about the gifts and transfers. Is that only a certain dollar amount? Or like if my dad's gonna gift me $2,500 for Christmas, I don't need to let you know that, right? Is there a certain amount that I have to let you know?
It depends on the program, and it
Okay.
depends on your income. So for
Okay.
some programs, even $300 is we have to source it.
Wow.
For some, 50% of your gross monthly income or 25% of your gross monthly income. So
Okay.
it all depends. That's why it's better to check with the mortgage consultant before
Okay.
getting any of this,
Okay.
deposited to your account. Yeah, so and don't obviously don't transfer money back and forth, because it's difficult for us to document. Don't make large deposits. Don't deposit cash. This is a big one, because cash is not going to be acceptable source of assets, because it's really, there's no way to document it, so we're not going to be able to use it. And I don't, the second bullet point is, and I'm kind of all over the place, I apologize, but the second bullet point is don't move money and close accounts. So what I mean by this is sometimes clients move money, open brand new account, move money from the old account and close that old account. So that could be potential problem, because when you close the account, you might not be able to get statements from us. So we'll see the new account with a bunch of money transferred from somewhere, but we don't know from where, and you can't really give us documents because that account is closed and is not there anymore.
Got it. Okay.
So if you want to move the money, move it, but keep that account open.
Got it.
Just until after settlement, right? And then they can.
And after that, you're free bird, you do whatever you want.
I have a question on the deposit for cash. There are some out there who may do some work on the side, say, I don't know, refinishing furniture or something, and they sell it on Marketplace and make some substantial side money on it, like, maybe $3,000 a month, and that's either cash or Venmo, right? Or a Zelle transfer from just random people. how do borrowers need to account for that so it doesn't just look like creepy, questionable cash?
Also, when it's Venmo or Zelle, it's not really cash, right? That somebody sent the money and it's documentable. And if that person, that's their livelihood and that's the income, self-employed income that we are counting, it's easy to document. I would stay away from receiving cash from clients.
Okay,
And just tell them Zelle me or Venmo,
yeah,
or PayPal, whatever. That will be easier. But still, before doing any of that, check with the consultant to see what the best way to do
how to
it.
deal with that.
Okay.
Okay, all
Makes
right,
sense.
good.
All right.
Next, was
And
there another?
That's it.
That's it. Okay, that's a lot to keep in mind.
I know.
So basically, the answer is talk to your lender. Don't do anything and just talk to your lender.
Yeah.
Make sure, as you referenced, your mortgage consultant, but use that consultancy function in this process so that they know they're not making any mistakes that could
Right.
cost them the mortgage.
I
Right,
agree.
Yep.
yeah,
All
once approved, just, what
Stay.
do you say, toe the line?
Total.
What does that mean? Where did that come
I have no idea.
from? Do you know where toe the line comes from?
Hmm.
I don't either. Okay, I'm gonna have to learn.
Look it up.
Okay, if anybody knows that, I'm sure they do. Write it in there. How did they write it in?
They write in our comments that they have it on this thing. I don't know. At Tatiana. All right. So I hate to cut this short. I've got to head out for an appointment. So do we have anything else that we're?
I think that's it. Merry Christmas, happy
Yes.
holidays.
We'll see you next week. We're gonna do
Oh,
one.
we'll see you next week.
Yeah.
Yeah.
That's when it's
Okay,
Yeah.
that's when we'll have chaos in the house behind us. It's gonna be great.
Yeah, your mom's gonna be on.
awesome.
Have a good week.
All right, we'll see you
You
later.
too. Bye
All right,
again.
Bye.
bye-bye.